everyone. Welcome to Reimagine 2020. I'm one of your hosts, Artur. Today I have with me Matthew Graham, CEO and founder of Sino Global Capital. Welcome, Matthew.
Thank you, Arthur. Pleased to be here today.
Thanks for coming. So why don't we just get right in? Tell me about your background and how did you first get into crypto?
Sure. So my post-MBA background is sell-side investment banking for international companies that have very unique needs for the mainland China market for strategic partnership and investment. So first, I worked at a boutique investment bank managing their international business, and then I founded my company, Sino Global. The concept was always that we would very naturally and organically develop one or more sector competencies, and very much in line with that, we quickly became increasingly focused on the blockchain sector, and before launching our own fund and going full in on the industry. So I've been in China about 8 years, and that's our in addition to blockchain, that's our key competency, bridging international best of breed projects to the mainland China market.
That's fascinating. I'd really like to kind of understand a little bit more about that, because I guess just like the internet, the Chinese crypto market is also very isolated from the Western one, and very rarely do either sides get a glimpse of the other side. Sure. What would you say are kind of like the main or the most important like differences in the mentalities and trends between these two?
So I do think, first of all, that there is a kind of bifurcation that you, in the way that you alluded to. It's not as extreme yet as with traditional internet, so to speak, where we have, Google and Baidu, et cetera, et cetera, et cetera. It's not quite that extreme, probably for many reasons, not yet anyway, but for sure it's bifurcated. I think it can be difficult to make those kinds of generalizations, but certainly there are. The short answer is it's complicated. But I would say this, that in traditional internet, the Chinese companies already are, in my view, at least as technologically proficient and business model proficient as the Western companies. When I use WeChat, for example, that's at an absolute minimum, that's a technology, a platform that's equivalent in quality to Western products. In the blockchain sector, it's still a little bit more of a mixed bag. Chinese in blockchain mining, in crypto mining, that is to say, are world class. In some other types of projects, it still tends to be more geoforks and things like that. It's really a very complicated landscape. But I do think two things. First of all, I share the concern that many people have, that there could be an increasing bifurcation, as with the traditional internet, where we have two separate ecosystems. I hope that won't happen, but I share that concern. And then the second thing, I for sure agree that there's different relationship networks already, and there's a lot of information asymmetry, things like that, in terms of international blockchain and China blockchain.
Mm-hmm. And what would you say? So I guess it's now starting to become like pretty clear what the value proposition of like cryptocurrencies are in the Western markets. This sort of be your own bank, and sort of this anti-central bank kind of mentality. What is the sort of what is the popular kind of value proposition for crypto in China?
Sure. So I believe there's also an element of that, but that philosophical strain tends to be less pronounced, I think, and there does tend to be more emphasis on the speculative elements. I would phrase it that way.
Yeah, I mean, and I guess that's one of the kind of
the ultra libertarian be your own bank type thing. I mean, that does exist, but it's not as influential. Maybe that's more for very, very hardcore participants in the crypto scene, and even then, not even necessarily all of them. It's less pronounced for sure.
And I guess like speculation is something that crypto is very, very good at, right? it's a great platform for that.
Well, that's certainly true for better or for worse. That's just a fact of life, I think.
What would you say? What makes kind of how do you even approach like crypto investing in a sort of because as an investor, how do you make kind of like multi-year investments in an industry or in a sector that seemingly kind of changes like directions and trends multiple times a year? How do you kind of like maintain like a level compass?
That's a good question. I think, by the way, many people don't. I think they opt out of that, including so-called crypto VCs. So they end up having a much shorter time frame instead of a traditional VC cycle of up to 7 years. Even they would have a cycle that looks more like 6 months. We tend to not do that. We tend to have a much more traditional approach. But for sure, what you say is true. Everything is speeded up in crypto. I think that the one way more than anything else that we handle that is we really look for people that so crypto is an extreme industry, and especially in China, that's also an extreme market. So you have extreme to the power of extreme. We handle that by looking. We probably are the most conservative people in the craziest industry in the craziest geographic location, which I think is kind of where we want to be. If everything around us is very hectic, we ourselves want to have a very traditional conservative approach. So that's for sure one way that we handle it. And then we look for more traditional teams. We look for people that have background fintech, financial or technology or fintech backgrounds that we would be comfortable investing in. If we were not investing in the blockchain sector, we kind of look for those types of people that we feel comfortable working with for a long-term time horizon, and then knowing that they have the background and the competency and the ethics to be able to pivot in this very extreme industry.
Right. And is this a value proposition that do you find like this value proposition resonates well with like potential portfolio companies and founders?
Sure, I do. I think it resonates very, very well in two ways. I do think that unfortunately in our history there's a lot of dump on retail, and that's fundamentally boring to us, and we just don't play that game. So what we're finding is that we're increasingly getting a reputation where when our name is attached to a project, people know that at least one of the main stakeholders in the project really believes in it for a long-term time horizon. So then that kind of creates a flywheel or maybe an upward spiral type situation where that allows us to having that reputation as a beachhead allows us to increasingly attract high quality projects. It's a self-reinforcing beneficial cycle. That's the first thing. And then the second thing, I do think that we are extremely differentiated in that we provide a window and a point of access to the mainland China blockchain market, which is arguably the most important market in crypto, and B, also the most idiosyncratic and impenetrable. So that's something also that is extremely attractive to potential portfolio companies.
And got it. I mean, I completely agree. I think the sort of how much more could be achieved if people only, you know, could take a slightly more long-term view, right?
There's a
kind
famous expression that they use at Goldman Sachs, which I really like, which is just short and sweet. They use the expression "long-term greedy," and that's something that resonates with me. I think it's very smart. Because we are in the business of making money, but I fundamentally believe that the way you are most successful for the long term is by having a long-term mentality and working with the highest quality people that have a similar mentality from all around the world, and doing things in that long-term sustainable manner is really the way to build, as opposed to continually cycling through short-term projects. And you get a reputation very, very quickly if you're always dumping on retail. I think it's an enormous mistake that many people make, probably for many reasons.
Absolutely. And I mean, like, you know, how can you call yourself like a VC fund if your investment period is like 6 months, right? That's a trader.
Yeah.
And
I think a lot of it
is this like a
so
proposition?
traditionally, we have a little bit of latency, and I have a nasty habit of talking over people to begin with. So I'm sorry about that. I'm working on it. But I think part of it is VC traditionally is a occupation where you're trained under a VC for many years, and until you're ready, or for a period of years until you're ready. The point I'm trying to make is that in crypto, I think a lot of VCs are people that were early adopters, that are now allocating that capital, things like that. And I do think that there's a lack of formal training and competence sometimes that complicates things. That could be part of why this phenomenon exists. The other part, I suppose, is just being human nature.
And is this like a kind of a proposition, or, you know, like a mindset that you're how religious are you about it? Do you kind of go as far as to try to enforce it onto, so like, you know, your other kind of like peer investors? Have you made any, like, you know, nemesis
No,
who you
I
refuse
that's
to be
not.
in a project together with?
That's a good question. I would phrase it like this. We routinely turn down projects where we think we could make money, but it's very short-term money, and when we're concerned that there could be long-term reputational damage. We do that very frequently, actually. In terms of enforcing it on other investors and peer pressure and things like that, I don't really view that as our role necessarily. Also, both in China and outside of China, we tend to spend as much time as possible with engineers and developers and traditional finance people and things like that. We don't really view. I think the worst allocation of your time, if you're a VC, is hanging out with other VCs. So that's not really
Which
where
is what they tend
we
to do the
want
most,
be
actually, right?
spending our time or our influence. I would much rather be spending all our time with hotshot young developers. So I just fundamentally don't really view that as our role. And even if I did, I don't think that we would necessarily be able to influence people to act differently. In terms of, so I guess the long story short then is we just worry mostly about what we do. we as I mentioned, we do routinely turn down projects for that reason. Being on a cap table with other VCs that sometimes do that, I think that's a more complicated situation. I'm not sure it makes sense to take that extra step, because if we're in it for the long haul, then we don't really care if other VCs are not.
Mhm.
We'll just buy more in the secondary market. I don't care.
Mhm.
If I believe in a project for 5 years, 10 years, and other people are dumping, I'll buy it on the secondary market. We do that all the time. I don't care. So I think we kind of view it through these lenses.
Got it. Got it.
Yeah.
I want to ask you for
And
advice
by the
from
way, just to
sorry, go on.
put an extra point on that. Sorry to interrupt again. That's something that's fun about both China and crypto. So for traditional VC, you really have a much more constrained mandate. And but for being in Asia crypto, you can the mandate is much more flexible, where we can do things such as buying on the secondary market and things like that. In traditional VC, you do your seed, your A, your B, et cetera, and then you're kind of supporting your portfolio companies and waiting for the next round, which is super fun and super valuable. But your mandate is probably much more constrained. Here we can act in a way sometimes that's more like a hedge fund, as part of our very flexible mandate from our LPs, and that's something that's probably unique to Asia crypto. You probably could not do that uh, with very in most cases. You could not do that even in United States crypto. There are some exceptions where they have more flexible mandates, but the point is that that's something very fun and very unique to Asia crypto.
Mhm.
Almost like you can have almost like a VC hedge fund hybrid.
And I
Effectively,
guess
that's what we
in
have.
an industry so new, that
Yeah,
becomes like or has become like a pretty big competitive advantage to you, right? Like between other funds.
sure. Yeah, if you have super flexible LPs that you've known for many years, and they have an attitude of just go make some fucking money, then that's something that's a competitive advantage for sure. Yeah.
Mhm. So I
as,
want to
as
ask you
opposed to if you have
for
some
advice
some
from a couple
stodgy
different like
conservative pension
angles.
fund. As opposed,
Sorry,
if
go
you
on.
have a stodgy conservative pension fund that says, look, we only want you to do A and B. If C, D, E, and F can make money, that's outside the scope, et cetera, et cetera. That having that extra optionality is a huge advantage, no question.
Hmm. Got it, got it. And so I want to ask you for advice from a couple of like different angles. So like wearing different hats. So like,
Yeah.
what would be the questions that you think projects raising money from? There's now like it's basically like the number of crypto VC funds is like mushrooms
Yeah.
after rain, like we say in Estonia. What are the like the serious questions that a project should ask from a VC?
So from the project side, what would you want to know about a VC? Is that the
Yeah.
question? So I think people I would advise people to ask for references more. I think
Hmm.
projects are sometimes not aggressive enough about saying, well, who the hell are you? Let me talk to your portfolio companies that you've invested in previously. Give me some names.
Hmm.
I want to get on the phone. I would do
Hmm.
that if I were a portfolio company. I think that's a super fair ask. Uh,
Absolutely.
and what's that? If
Absolutely. No, I completely agree.
I were a best of breed portfolio company, and I was confident that what we've got is world class, absolutely an investor, I want to know who the hell are you? And you don't say it like that, but you say, look, we would like to talk to some of your portfolio companies, and we
Hmm.
would, you do a reference check. It's just like they say when you're, if you're interviewing for a job, right? It should be a two-way interview. It's the same thing. So that's the first way I would approach it. I would approach it as a two-way interview. Don't think of it as we're trying to convince these people to give us money. Think of it as, do we even want money from this particular entity? Because you may not really, because of reputation or because of many things. And that leads to the second point then, where I would want to know what kind of support comes with this check, because it can be a little cliched, but the whole point of venture capital is to have access to skills and Rolodexes and different kinds of capabilities. So you should know what comes with the check. So for example, with our check, we provide, as I mentioned earlier, we provide that window into the arguably the most important, but also the most idiosyncratic and impenetrable market in crypto, the mainland China market. So that's what comes with our check. But you should always be doing that two-way interview, asking for references and trying to suss out what comes with the money. If it's just money, you don't want dumb money. You don't want just money. That's not what you want. Not if you're a best of breed project. So I would kind of approach it in that.
Got it. And so now, if I wear a different hat, as a high net worth that is now starting to get convinced on the potential of crypto and wants to to get to get exposure, then essentially I think the natural way to go about it is you find an actively managed fund. But at the same time, I have heard from multiple people that there is this kind of doubt that, like, why would I be paying a management fee for trying to outperform Bitcoin, and there's a risk of underperforming it. What should like a potential LP ask the sort of again a massive number of funds pitching to them?
Sure, this is a very good question. And by the way, I think for many people asking that question, it probably would be more appropriate to just hop on FTX, and if you want exposure to DeFi, buy the DeFi index on FTX, or buy some other kind of index. For most people, I think it'd be more appropriate to just hop on FTX, buy X% Bitcoin, buy X% Ethereum, excuse me, and then buy a DeFi index, something like that. I think for most people, it's more appropriate to approach things in that way.
So to self-serve.
Yeah, I do believe that. I think as you start to talk about greater amounts of money at a certain point, you could say, well, now I want a percentage of that to be for an actively managed fund, VC or otherwise. But the amount of money, I think the bar is quite high. You could hit 50 million bucks before that makes sense, I think. When you hit maybe 50, you want to allocate maybe 10 to actively managed. But before that, I think there's a strong argument to be made that you're better off self-serve. So
coming from you especially, I think that's very valuable advice.
Yeah, most of our LPs fall in that category where they have either, some of them are ultra high net worth, some of them are business entities of one form or another, but they all are at a minimum hundreds of millions net worth in terms of their investment portfolios. That does not include, that's not all crypto, but the point is that you can get to a pretty high number before it makes sense to go in a different direction, I think.
Mhm. Got it, got it. And now the last hat that I'd wear would be, what would your advice be to, or I guess context wise, we're starting to see like a bigger and bigger inflow of talent going into crypto as it gets more
Yeah,
like validated.
yeah.
What would your advice be to aspiring like entrepreneurs that are looking to kind of get involved in the, as like a, you know, to start essentially a crypto business?
So by the way, the first thing that's exciting too is that that trend is even more pronounced in China. I
Mm,
think previously in China, I think almost all the high end talent went to, you know, Alibaba, Tencent, et cetera, et cetera. I think crypto was fundamentally viewed as too dodgy, frankly.
mhm.
It's hard to explain to your parents. I turned down Alibaba to go into crypto, and they're gonna be like, you did what?" I just financed your overseas education, and you're gonna do what the fuck? So uh, previously it was a non-starter, I think, for most of the high-end talent, and that's changing very rapidly as a result of the Chinese government kind of anointing blockchain as a strategic industry in the same fashion as 5G or AI, et cetera, et cetera. Plus, also the People's Bank of China with the DCEP, the digital currency. Uh, Multiple factors, and now that high end talent is in blockchain, is considering blockchain as at least an option. So by the way, that's a trend that's even more pronounced in China that we're super excited about.
Mhm.
And then the next thing, how to get started, I think really uh, on either the investor side or the developer side, I think when you have an industry that's still fundamentally very, very early, if you were to compare it to the internet, I think we're still like, from a US internet perspective, I think it's still comparable to like 1993. You know, this is like not even AOL, this is like Prodigy and CompuServe. And then a couple of years later comes AOL. And then a couple of years later, Jeff Bezos quits his high flying Wall Street job and starts Amazon. So the point being that this is really, really, really still quite early.
Mhm.
Um, and the upside of being so early is that you can get started by just getting started. So the way to learn how to invest is just starting to get into Telegram groups and play with the new projects as they come out and learn step by step, teach yourself. The way, and that's true on the project side as well. The way to get started is just playing with the technology and doing little projects and increasingly raising your own bar. And that's the benefit of being in an industry that's so very, very early. It's later in industry's maturation when all the barriers go up and it's like, well, I gotta know a guy that can, or gal that can get me that first interview, and I gotta have all these connections, and I gotta have a Stanford degree or whatever, all that bullshit. The benefit of being so early is you can be like a Wozniak, and you can just, you know, Wozniak got started by just going to the, I think it was called the Homebrew Computing Club, which was just a weird hobbyist club. And that's how Steve Jobs got started, with a non-traditional background. His background was like a calligraphy major at Reed College or something weird. So when you're so early, you just go. And that's something that, and I think we're very early and you can still just do that. You just get started. You get in there, you play with product, you start making product, you meet the people. It's still a very small community.
Mhm.
That's part
Got
of the
it,
fun.
got it. And
10 years from now, you won't be able to get in this industry without all those nonsense. You know, you got to have the connection or you got to have the fancy degree, things like that. It's just like now, if you want to, you tech is a little different. You could also probably get a job at Google or Facebook just by being just an absolute animal developer. I believe that you could. There's evidence for that. But the point is that 10 years from now, it will be enormously difficult to get started in a real way. But today, you get started just by just going and being an obsessed animal.
Got it. And what are the most kind of common like mistakes that you see from projects that come to sort of to pitch to you? What are the kind of, are there any sort of like deal breakers that keep coming up and up, which you just like wish the project would know about to avoid them?
That's a good question. I think there are different types of deal breakers. Excuse me. I have a little bit of a cold today. Excuse me. I think one deal breaker that is a little bit unique to us is that this is something we've seen a lot in 2020 with DeFi, where a project will pitch an aspect of decentralized finance, and they will have all the hotshot developers, but they will not have someone with very deep domain expertise on the financial market side. And we will pass on those deals all day long. I don't believe that, I believe the products are already sophisticated enough where if you have only the development expertise, you could be all hotshot computer scientist types, developer types. If you don't have the financial markets people on your bench, I think you're going to get killed, because you need to have both. And I'm seeing this in multiple aspects of our industry. Another example there's been a lot of talk this week about when you get an audit. If you only have a tech audit and you don't have a business model finance audit, then there's a very high risk you're going to get killed. There are very, very sophisticated high frequency trader types in our industry now. And even if your code is tight on the development side, if there's a weakness in your economic model, they will find it and they will kill you. So you have to have both the financial markets and the development side on your bench. When you do an audit, same thing. You have to have both. Otherwise, you're at enormous risk for being picked off. We saw that this week, right? There was a high-profile project that got arbed to death because they found a flaw in the economic model, and it was a project that did an audit that had been around for a few months. But if you have a financial market specialist that really takes a very, very close look at the economic model, if they find even one flaw, that could even kill your project. So that's something that we place an enormous emphasis on. I don't care if you're the best developer in the world. If you're doing a sophisticated finance product, even if it's decentralized finance, or especially if it's decentralized finance, you need to have a partner, or you need to yourself have that kind of financial markets expertise, so you can understand how you will be attacked, because it won't be just from like a hacking standpoint. It will be from an economic model standpoint. You will for sure will get attacked in both ways. So that's an example of something where we an example of something we look at extremely closely that I is somewhat unique to us, but I believe in very, very strongly.
Got it. And I guess my next question is like slightly related to this, but what are the trends that you are most excited about and least excited about that you see today in the industry?
So I think that this is a tougher question to answer. I think that for us, we look a lot at teams, because we know that people will pivot, and we know the industry is changing so quickly. That's the first point that I would make. The second point that I would make is we get very nervous about anything related to regulatory. That's why we weren't very interested in STOs. We think these lawyers and regulators will just crush you over time. And so it's if you're going to tell me that something, and then question mark is going to happen, and then you'll need 3 regulators, it would just, if it's regulatory, we get very, very uncomfortable. I'm skeptical on that. And then I guess the third point that I would make is we place an enormous emphasis on optionality. So, for example, when we look at NFTs, we think there's a lot of potential there. We think that it's enormously difficult to speculate where value ultimately will come from. Will it come from digital art, digital music on the copyright side? Will it come from, digital tickets for events? Will it come from it could be any number of things in terms of NFTs. One of the most promising, I think, is for in-game collectibles, things like that. But we think it's very, very difficult to say where it's going to come from. So we look for teams that preserve optionality. They have a plan that they're going to be open-minded about how NFTs or whatever aspect of blockchain develops, and they're prepared to pivot. So that's something that's very important to us, because when you look at something that's earlier in its development cycle, you have to anticipate that it's going to really change a lot over time. So I would, this is a very important but difficult question, but I would answer by the way of I just did a few examples of our thinking.
No, I think that was a very, very good answer. I guess I know you're super busy, and I'd like to just get your take on kind of one more side. So you mentioned earlier that you've been focused on developing a sector competency in blockchain, and I think this year, like, DeFi has completely, like, consumed the entire sort of spotlight that there is.
I'm sorry. Go ahead. My fault.
I was just going to say that that sort of like this year DeFi has sort of like consumed the spotlight for this, for the entire like blockchain industry. What are the other sort of like, what other parts, it's aside from sort of like, use cases aside from money, would do you think we should be looking at when it comes to blockchain?
So is the other question, is the question, what else besides DeFi do we view as very promising? Is that the question? Well, I did mention NFTs just now, but really I think DeFi has a long way left in its cycle. And I'll tell you why I think that. I think that the DeFi, the maturation of DeFi is extremely related to the development and the capabilities of the surrounding technology. Here's an example of what I mean. With 2020 Ethereum, there's a high barrier in terms of transaction cost, and there are issues with the latency, with the speed of the chain, right? As we know. So this is very limiting towards the complexity of the decentralized products, financial or otherwise, that you can have. So what's happening now with Near and Solana and Polkadot and Ethereum 2.0 is that, and others, is that new capabilities are coming online, and that's going to fundamentally change the complexity and the sophistication of what you can implement. A great example of that is Serum, which is one of our portfolio companies that we think extremely highly of. So in Ethereum world, you can have an AMM, you can have an automated market maker, you can do things like Uniswap, which are enormously compelling. Uniswap has done a fantastic job of taking some key functionality and making it enormously successful. Excuse me. But now you have Solana, which enables transaction speed that is as much as 10,000 times faster than Ethereum, and with transaction cost that's substantially less. And now, as a result of that capability, you can do things in the decentralized finance world that are much more sophisticated than an AMM. And Serum, again, being an example of that, where they have a full on-chain order book, fundamentally not possible before. So the key takeaway then is that decentralized finance, this trend is still, in our view, kind of early. Most important reason why, because the surrounding technologies are becoming increasingly robust and mature, thus opening up the design space. So I would really stay in DeFi for a while.
Got it. And so I know we're running out of time, and I guess I just like to thank you so much for your time, and I think the sort of the future looks very bright with the sort of with the direction that the industry is going, the talent that is sort of like flowing into it, and I guess lastly as well, of course, with investors such as yourself, actively participating in it. So thanks again, Matthew.
Thanks very much, Artur. This was a lot of fun. Thank you.
My pleasure.